In this video, I'm going to show you the most simple and easy to use trading system. It is simple and easy to use so that you can repeat it over and over again. A big mistake I see a lot of traders make is that they make their system so complicated that it becomes hard to repeat. Our job is to simplify our system as much as possible so that we can easily repeat it. So if you've been struggling with a system that you don't find profitable, you have a hard time sticking to, I believe that this video will help you out. This is a well-known profitable trading strategy that I've personally used for a long time, and I've also shown it on this channel before. I'm now going to do an entire video going over exactly what you need to know in order to make this work, simply because I understand how good this strategy really is, and I promise you, if you stick with it long enough, this is all you need in order to turn out profitable. The problem is, a lot of people simply cannot stick to a singular system for a long enough time to see profitability, and therefore, before they end up seeing profitability, they end up quitting and calling it a scam. So without further ado, let me show you exactly what I mean when I'm talking about this trading system. So the first thing that we'll be talking about is liquidity. Now, I don't just want you to use any old high and low. We have to look for certain liquidity pools of significance. Now, what is that? Well, if we take a look at the screen right now, a lot of people probably don't see much. But if I start drawing on this very chart, you'll be able to see exactly what I'm seeing. So right here, we have what I would classify as equal highs. Now, what does equal highs mean? Well, it basically means when we have a high here, we have a high here, and we have a high here. None of these three highs took each other out, meaning that the stops that are placed here are still in the market. Stops that are placed here are still in the market, and the same thing with this one, right? So there's a bunch of stop losses at this high from traders shorting support and resistance, double tops, whatever. Now, not only that, but if we come further down, we see trend line liquidity. Now, what is that? Well, trend line liquidity is very, very easy to understand. A bunch of traders, probably every single trader on the planet, is familiar with trend lines. Now, what does that tell us? Well, that tells us that a bunch of traders shorted here and a bunch of traders shorted here. Now, where did these people place their stop losses? Either here or here, right? So we know that we have a lot of stop orders resting here and also here, right? So now all we are missing is some sort of liquidity down here to be swept, but it has, again, to be a significant pool of liquidity. So what I see is that we have equal lows here being swept. So at this point in time, we have swept equal lows. We have trend line liquidity that has not been accumulated yet. We have equal highs that has not been swept yet either. And this is exactly what we need. Okay, we need a significant liquidity pool to be swept, and then we need to have a significant liquidity pool as our target, which is exactly what we have in this very example. So what does this tell me? Well, I see automatically that we failed to display lower after hitting our key level of these equal lows. That automatically tells me that the market is more bullish than bearish, because if we were to go lower after sweeping these lows, I would want to see heavy displacement to the downside after sweeping such a key level. We didn't get that, but what we did get is displacement above the high. So at this moment in time, we are not struggling at all to go higher, but we are struggling to go lower, right? That is a clear bullish sign to me, and that is all I need. So again, I need a sweep of a significant liquidity pool followed by displacement above the high, which is exactly what we got here. What I do then is that I draw my Fibonacci extension tool from the low that swept the liquidity to the most recent swing high, and then I will utilize the optimal trade entry to take me towards our other significant pool of liquidity, which in this example was these equal highs and this trend line liquidity. So this very entry and stop loss is mechanical. You always enter on 0.618. Your stop goes to 1, and your take profit goes to the significant liquidity pool, which in this case were these equal highs. Now you can use, for example, this high right here, internal range liquidity, as your break-even point and partial point all you want. The most important part is that you take your full take profit at the end of the significant liquidity pool. So that right there is this trading model in a nutshell. Now it may sound more confusing than it actually is. I will show you some chart examples and we'll go over it together so that you understand exactly what I'm talking about. Now right here, we see a perfect example of this playing out. This is a 1-minute chart on the NASDAQ in the overnight session, okay? Now, this is a very, very intraday example. This is a scalping strategy mostly. It does work on any time frame that is for any concept, right? A lot of people ask me, well, what time frame does this work on? If something works on the 1-minute time frame, it also works on every other time frame. That's the way trading works, okay? Now, in this example, we have equal lows here, and we also have equal highs made right here, right? So before this happened, we got a large up move in price. So that already tells me there's a lot of bullish momentum going on in this very market. So what I'm going to do is wait for price to either sweep the highs or the lows. But because we have this bullish displacement out here to our left, I would prefer if we swept the lows. So let's see what happens. And with the very next candle, we do sweep the equal lows. Now I'm going to anticipate that we're going to run the equal highs because, again, we are moving from one significant liquidity pool to another significant liquidity pool, or at least that's what we're going to anticipate. So all I'm waiting for now is for some sort of displacement candle like this one to happen. And then I'm going to take my optimal trade entry Fibonacci tool here to the high of that. And we made a new high. So I follow along with my optimal trade entry. And again, I'm going to use the 0.618 as my entry every single time, the 1 for my stop loss every single time, and then I'm going to target the major liquidity pool that we have here. And let's see what happens. The high became a higher high. So we follow along. And right there on the next candle, we would have gotten filled. So now I'm going to play it out. And as you can see, even though this is very, very intraday, it works like a beast, right? So what we did was we identified one pool of liquidity, significant pool of liquidity, which was equal lows. Then we identified another significant liquidity pool, which was equal highs. Then we wait for, preferably in this scenario, because of the displacement we got out here, the lows to be swept. They got swept. Then we got this huge displacement candle, which is just a large candle with a lot of volume behind it, which we got here. I draw my Fibonacci from the low that swept liquidity to the most recent swing high, which was this one. And again, I'm going to enter off the 0.618 every time, and I'm going to place my stop at the 1 and then target the opposite liquidity pool, which was resting right here. Beautiful intraday example of this trading strategy. So here we have another great example of this strategy playing out. We have equal highs made right here. Now, these are very, very equal highs, and that tells me that there's likely a lot of stop losses right here. Now, if we come over here, we can see that we swept the high right there. And what I want to pay attention to after we sweep my first significant liquidity pool is whether we displace above that high or not. Now, displacement is just a fancier word for a lot of volume within a market. So I don't want to see a push above the highs with volume, essentially. And we certainly didn't get that here, right? We got a rejection candle, and then we got bearish displacement, which is what I explained in the beginning. That is exactly what I want to see. Now, after that, I will draw my Fibonacci extension tool from the high that swept liquidity to the low. Now again, because the entry and the stop loss is mechanical, I'm going to place my entry at the 0.618, my stop at the 1, and then I'm going to look for a possible point in price that I would want to put my take profit at. And again, what do we see here? We see a perfect trend line forming here. So I know for a fact that there is a bunch of stop losses at this low and at this low, and possibly even here for the equal lows with these lows. So again, I have a point in price where I want it to go. Now, if we come further down, we'll actually be able to see that we have equal lows all the way down here. Now, something about me, this is not a trade that I would ever place on the live market. It's simply too optimistic for me. So what I will do instead is I will take my 90% of my position off at this low here, because that is what I would do on the live markets. And then once we've hit that, I will leave runners until the equal lows down here. So let's see exactly what happens. Again, we're going to take 90% of our position off at this low, and then we're going to let the runners run till 825 down towards these equal lows. So that would have been 90% of the position off there, and certainly a break even has been put in right now. Now, again, I would let some runners run till 825, because just in case the market does want to come to these equal lows here, I can make a little extra money, and I still protect my downside by taking 90% of my position off at my original key level. So we would have been stopped out right there for the break even of the remaining 10% of the contract. But as you can see, an absolutely beautiful play utilizing that exact model that I was talking about, right? We identified our first key level. Now we waited for that to be swept. Then once we swept it, we looked for if we displaced above it or not, which we certainly did not in this example. Now, what we want to see after a lack of displacement after sweeping high is displacement in the opposite direction towards our other key level, which we got right there. So again, I established my first key level by looking at this trend line liquidity. So that is what I'm going to use for my take profit. Now, the second key level in terms of take profit was these equal lows down here that unfortunately never got hit. Now, while I'm back testing, I can't see or look for SMTs. So we don't know whether the S&P 500 maybe swept these lows and therefore we got a reversal higher. Anyway, that is what I would normally do because I would never go for a 7R position on a live account. I would definitely take 90% of my position off here and then maybe leave runners until the full 7R take profit. But again, super, super simple and easy to use strategy. And if you have a lot of trouble following a specific system, it's probably because it's too complicated and it doesn't appear very often. This setup likely appears once a day if you know when to look for it. And I guarantee you, if you stick to the stuff that I told you in this video, this is a very, very profitable system. So I want you to try it out. Use the rules which I gave you in this very video. Place one trade a day and use the same amount of risk on every single trade and watch your account grow. Thank you a lot for watching. I'll see you in my next video.